I'm Lisa Roushey. I'm the chair of the affiliates committee, and I hope you enjoy today's presentation. I hope you get a lot of great info out of it. We want to thank our sponsors, without whom none of this could be possible. And if you could please direct your attention to the screen. Here are our sponsors. Hello, I'm Lisa Marie Roushey from the Law Office of Lisa Marie Roushey. I'm a solo practitioner real estate attorney based in Shorewood. I look forward to working with you, and I hope you enjoy Food for Thought.
Hi, this is DJ from Fidelity National Title. Happy to be one of your Food for Thought sponsors. My phone number is 708-363-3740. Thank you.
Hi, Patrice with Fresh Air Experts, and we eliminate odors like smoke and pet and cooking smells. It's affordable and makes a difference in the bottom line. Patrice with Fresh Air Experts, give me a call.
Hello, my name is Gary Mueller. I've been the attorney for Three Rivers for over 20 years. I'm a major RPAC investor, and please allow our office to work with you and on behalf of your clients. Please reach out by 815-725-7300. Thank you.
Call SLS Home Inspections today. Why? $115,000 in free buyer protection warranties for your client. That's peace of mind. 815-644-6271. Call today. That's 815-644-6271.
Hey, Carol with White Glove Building Inspections. Since 1990, doing residential and commercial inspections, full service spectrum of additional services, multi-inspector. So give us a call. Make it great.
My vice chair, Becca Willey from Radon Express, is going to introduce our speaker today.
Hi everyone, I'm Becca, Lisa's vice chair. So today we have Margie Manietta, CPA and owner of RJ Manietta CPAs Ltd. I'm going to give a little bio. Margie's dad started the business in 1974 at their kitchen table, and she joined in December of 1991. She received her master's in accounting in May of 1997 and passed the CPA exam in November of 97. They are a family-owned business, and they work and understand other family-owned businesses, such as real estate related. She's a member of WESOS and the Greater Fox Valley Kiwanis Club. So with no further ado, Margie, welcome.
Good morning, everyone. Oh, there we are. Good morning.
That's funny.
Thank you for having me. I appreciate it. Thank you for everybody coming out today, even though I can't see you. Hello, good morning. We are right now in the middle of tax season, and obviously another crazy real estate season for all of you fine folks. And maybe as you're going along and you're doing your taxes, you're seeing, as a result of the crazy market, you're owing some tax. Maybe that was expected, maybe it was unexpected. But I wanted to talk today a little bit about setup of your business. LLCs are bantered about and thrown about as if they're this magical tax saving setup, and they are very good. They can be used to save some taxes, but we'll start at the beginning. When you go to register, if you decide you want to be set up as an LLC or a corporation, the Secretary of State, Illinois, allows you to do an LLC or a corporation. If you decide you want to be set up as a corporation, you have two choices. You could be an S corporation, a subchapter S corporation, or you could be a more traditional C corporation. And those are your options. That's all we have on that in that arm. If you decide you want to be an LLC, that gives you a few more options. You could stay as a single member LLC, which is one person, and the IRS treats that as a disregarded entity for tax purposes, meaning that we would still file a Schedule C within your tax return. And all of your profits are subject to self-employment tax, plus your federal and your state income tax. You could go into business with somebody else and become a partnership, which is its own tax return. And then at the end of the year, you and your partner would each receive your K-1 with your share of whatever the profits and losses are. And those profits are also subject to self-employment tax. You could, your next option is you become a subchapter S corporation. And the beauty, if you will, of the subchapter S corporation is that your profits are not subject to the self-employment tax. They are subject to the federal and the state income tax. And one of the requirements is that you treat some of your profits as payroll. So you would become an employee of your company, and we would take out some of those profits as payroll. So that is one of the options. The next option is to be a traditional corporation. And honestly, we don't see many of those anymore. Once the Tax Act changes came through in 1986, lowering the individual tax rates, S corporations became the in thing. And that's where most small businesses have gone, more so to avoid paying the self-employment taxes. Now, some of your brokers might not let you become an S corporation. It might interfere with any kind of, I can't think of the word, trying to negotiate, or if you have to go into settlement talks, that will interfere with you becoming an S corporation. So you might have to stay as a single member LLC. The benefit of an LLC, same as a corporation, is that it gives you some legal protection like any other corporation. So there is a wall, a fence, think of it as an additional insurance policy between your personal assets and what's happening in your business. So it's another layer to keep your personal assets away from what's happening in your business. We're trying to put as much space between your business and your customers and anybody going crazy and thinking they want to sue you and what you have accomplished and earned and saved on the personal side. On any of these businesses, we can deduct all of your MLS dues, your fees, your continuing education, any other training, your licensing, your insurance, your networking, your marketing, closing gifts, closing costs, staging, photography, mileage for those that are driving, actually driving their clients around, your cell phone, your internet, laptops, tablets. All of those are your business expenses that you want to be able to keep track of so that we can deduct those and obviously lower your taxable income. So those are your big thing. Your big thing is going to be mileage. If you're out every day driving all over the Chicagoland area, you want to keep track of your mileage. Now, we can deduct our vehicle expenses in two ways. We can use the mileage rate, which is currently 56 cents a mile, or we could do our actual costs. Now, since gas is approaching $4.50, $4.60 and higher, this year, actual costs will probably be more beneficial than using our mileage rates. So you'll want to keep track of all of the gas that you purchase. You want to keep track of all the maintenance, the insurance on the vehicle, the license plate fees. If you're leasing your car, we'll need to keep track of the lease payments. If you purchase the car, you own it, we'll want to be able to deduct the interest of the loan payment. And you should invest in some sort of mileage app or at least a notebook to keep track of your mileage. Because on either approach, the IRS will require a mileage log if they decide they want to look at your tax return and verify your miles. So we want to make sure we have all of those documents. Mile IQ is a pretty good app through the App Store. It's, you know, swipe left, swipe right. It'll keep track of your tolls as well. And the nice part is you can upload that to Excel at the end of the year. So you have a hard copy mileage log if we need it. The other one that is pretty good, if you're going in a similar route, especially for your tolls, is the iPass reports. We can use those to keep track of tolls. And if you're going in the same pattern, if you will, that will also keep track of your, that'll be a good record of where you're driving to. MapQuest will work. Anything that shows your mileage and what routes you are taking so that we can back up the numbers that are on your tax return. The Schedule Cs are more likely to be looked at only because they are sitting in your personal return, particularly for mileage, for the auto expenses, because you know the IRS knows that there are people that fudge that number, and you're a little more, their mileage is a little more extensive than what it really is. So it's not uncommon for the IRS to do a line item audit, which is, hey, prove to us that your vehicle costs are actually what they are. You said you did X in miles, prove that you really did this. So the burden of proof is always on the taxpayer. According to the IRS, they are always right until you prove them wrong. So we want to make sure that we have all of that as a backup. You know, any networking events, any WESOs, BNI, LATIP, Chamber of Commerce, anytime you're out, you know, meeting people and you're buying, you know, lunch, dinner, coffee, make sure you keep track of those receipts as well. My recommendation would be to have a separate credit card that is strictly for your business. So at the end of the year, we could say, hey, these were all business expenses. I realize, you know, it happens to everybody where you're going to commingle, and that's just the nature of the beast. But if we could do our best to keep everything on one card or in one area so that we can have a good record keeping, that's fantastic. That's half the battle right there. It'll help you at the end of the year. It'll help you mid-year when you're trying to do some tax planning to avoid any unnecessary tax surprises. So we just want to do some good record keeping and make sure we have all of that information at hand in case our friends at the IRS would like some more information. Try to think of what else we can deduct. Back to the sub-S return though. So the partnership, the sub-S, and the regular corporation are all going to be individual tax returns, separate from your personal return. So you do have some additional expense outside of the annual fee with the Secretary of State. Now, if you're making $100,000, let's just say that's your net profit, your self-employment tax on that is $15,300. As a sub-S corporation, we don't have that. Your profits are subject to your federal and your state income tax bracket. So if you're in the 22% bracket, you're going to pay 22% on the feds and then the 4.95% on the state. If you're paying the self-employment tax, then really you're going to be paying about 42, 43% in taxes. So it's something to keep in mind as your profits increase, as your business increases. Do I really want to be paying in that kind of self-employment tax when I could take and have a little bit more control over how I manage my taxes versus leaving it up to the government to manage it for you? You know, you want to just make sure you're keeping track, keeping your records. If you're unsure of something, you know, feel free to reach out and ask, shoot me an email, give me a phone call. If you have to travel for any kind of, if you have clients outside of Illinois and you're traveling to other states, make sure you document that. You can always tack on a day or two after and a day or two before, and that falls within your travel expenses. Your spouse and your children, however, that would be a personal expense and not related to your business. Yeah, that's accounting in a nutshell. Quick, down and dirty on some of the better ways to save some tax dollars, which is really to look at becoming an S corporation, depending on where your profits are. You could do retirement plans on any one of those. You could do, as long as it's a one-person company, so it eliminates it out of the partnership, but you could do a UniK or solo 401k, which would allow you to put up to $58,000 a year into a retirement plan for yourself. So 0 to 58,000 to save some tax dollars. You could set up a simple plan. You could do a SEP IRA, which is based on your profits for an LLC. A SEP in an S corporation is based on the payroll that the owner is taking. You don't typically see SEP IRAs if there are employees involved. If any of you have subcontractors or virtual assistants or things of that nature, as long as you don't control their time and how they do their job, then they can be an independent contractor. As soon as you control their time and how they do their job, then they are an employee of your company, whether it's an LLC, single member LLC, a sole proprietor, a partnership, or an S corp. It's they would be an employee, and that's a very fine line to walk. The IRS, and particularly the Department of Employment Security, takes that very seriously, and they will not hesitate to reach back out and audit you if they feel like an independent contractor is really an employee and you should be paying in state and federal unemployment. Any questions I can answer?
Does anybody here have any questions? I texted back. Oh, okay, Amanda's not here.
Could she elaborate on the LLC and the costs involved?
Margie, could you please elaborate on the costs involved with forming an LLC?
Sure. The Secretary of State charges a one-time fee to set up your annual your LLC. It's $150. After that, you pay them a yearly fee. I want to say it's $75 a year. And it's really what you're doing with the LLC is you're coming up with your business name, and we are making sure that nobody else in the state of Illinois has your business name. So, nobody else can be Margie Manietta CPAs here in Illinois because we're already registered. So that's really the purpose. And as long as you're paying your fee, then we're, the state is very happy and you're good to go. Oh, and the Mile Track app is Mile IQ. Yeah, it's called Mile IQ. The setup for an S corporation is also $150, and their annual fee is $75 as well.
All right, let's see.
What was the question that you?
I wanted to ask about appreciating.
Okay, what
if you own your vehicle?
I didn't hear the question.
That's what I want to ask.
That's a great question.
Okay, Jen, why don't you come up and,
Here, just because I'm like, you verbalize it yourself, so I don't.
Okay,
can you hear me?
I can hear you.
Okay, I wanted to ask about depreciating a vehicle. Say if I were to purchase a new vehicle and use it for, 50% business, how would I go about depreciating that?
So if the vehicle is over 6,000 pounds, that is a separate animal for depreciation. anything under that is considered a luxury vehicle, and the depreciation is limited to whatever the business use of that vehicle is. And that's part of your personal return or your business return. And the depreciation is figured accordingly. So if you are using TurboTax or H&R Block or something along those lines, that should be one of the questions that is asked in there. If you are using your personal vehicle for your business, and do we need to set something up?
Can you ask her if you own your vehicle? How?
Okay, so the question is now, if you own your vehicle, what's the question?
What can you write off?
What can you write off if you own your vehicle, but you use it for business purposes?
So we could use either the mileage rate, which is 56 cents this year, or we could use the actual costs, which are the gas, the maintenance, the insurance, the registration fees. You write off tolls, but if the car is paid off, then that's what we have to write off, are the actual expenses or the mileage rate. If it's a new vehicle, you can set it up for depreciation if you're financing it. If you're leasing it, then you would get a portion of the lease payment. So if it's a 50-50, 50% business, 50% personal, we would be able to deduct 50% of the lease payment as a business expense.
Okay, great. Let's see what else we have here.
If you're not an LLC and ask for 2021, can you do it now and then can you taxes, your 21 taxes, you can name LLC like tomorrow?
Did you hear that question?
Something about an LLC.
If you're not already, so why don't you come up here and we can, because that was a big, long question. I don't know if I can, it's okay.
If you're an LLC, if you're not an LLC and you became one, say March 15th, 2022, can you write off your taxes in 2021 as an LLC? Or an S
Well, if you registered and became an LLC today, let's just say, that would be effective for the 2022 tax year. And a single person LLC does not change. You're still going to be subject to the self-employment tax, plus the federal and the state income tax.
Okay, what if you are currently at this moment, and you were in 2021, a single member LLC, and now you would like to become a subsection S LLC?
So,
If I were to do that today, can that apply to my filing for 2021? Or does that only mean moving forward in 2022, I'm a subsection S?
if you actually filed the Form 2553 today on its own, that would be for 2022. If you filed it with the 1120S for 2021, kind of like, oh, oops, I forgot to file that form last year, you could make your 1120S for 2021.
Okay, thank you.
Jen, did you get your question answered?
What?
Did you get your question answered yet? Perfect. Any other questions?
Does anybody have any further questions?
Which one has been tested more? Because I've heard that, and this might be a legal, not an accountant question, but I've heard LLCs have not been tested in court and you should go corporation. Does it really make a difference at all?
As far
They're discussing.
as your tax savings, or I mean, tested how?
In a court of law, that's what so maybe it's a legal question, maybe that's a legal.
But I mean,
I don't know how to
tested,
test it. That's
tested how? Like tested to see
that
how much it insulates you from personal
Yes.
liability?
yes, that the veil, it hasn't been tested on Pearson.
Oh, okay. The question is, and this may be more of a legal question than a CPA question, but as far as LLCs go, one of our members was talking about how he has heard that the veil and the piercing of the veil has not been tested in court to the extent that, the ability to pierce the veil on a corporation has been, and therefore it might be safer to form a corporation rather than an LLC in order to protect your personal assets from, any exposure.
That sounds more like a legal question. I mean, the veil is there for an LLC. That's the whole point of the LLC, is to give you the same protection that a corporation has. And the rules are the same for piercing the veil. You want to keep your personal business out of your business, keep these two entities, if you will, separate. As soon as we start to treat our business more as our personal checking account, you are starting to pierce the veil. And once we pierce the veil, then that protection is gone.
Okay.
Great, thank you. There is another question here in the queue. It says, when would it make sense to set up a business entity if you are a brand new agent with little to no income?
An LLC is pretty easy to set up. It can be done, through your attorney, you could do it online yourself. And the state gets back to you within 24 to 48 hours. So I look at it more as an additional insurance policy. Unfortunately, in today's world, you want to find as many ways as possible to protect you from, from people who are always looking for a fight.
Right. They liked your answer. Do we have any other questions, either online or in-house? No, I guess not. So Lisa?
Okay, Margie, thank you so much for taking the time to share your knowledge, your experience with us. As far as any of our attendees, if you have any questions, please do not hesitate to reach out to Margie. She has a very good reputation, and I know has worked with a lot of realtors, so she's very familiar with the issues that are affecting business.